Forex trading is actually uh, very hard. I wouldn't like to say very hard, but it's simple, but just to get the hang of it is actually hard, right? So I just want to show you a strategy that, a simple strategy that any beginner or even a professional trader can use to make profits in the market, and it's price action. I'm sure that all of you know what price action is, or just know just a little bit about price action. But today I'm just going to be sharing with you what price action is, how you can use it. If you're a beginner playing around, if you're a professional trader, if you're a little bit experienced in the market, I'm just going to be sharing with you some tips that are going to help you make money, because not everyone shares all the price action secrets, right? So I'm just going to be sharing with you everything that I know, everything that I can remember off the top of my head, just to help you guys make profits, right? So what is price action? Price action is just analyzing the charts, naked charts, right? We're reacting to what the price is doing, in which is actually the best, because we are doing what we are reacting to what the market is currently doing, right? So we are not waiting for indicators, because indicators sometimes they lag, right? So price action is actually the best, and I actually like to think of price action as the universal language. It works on any chart, right? So you can use it or in trading forex markets, forex pairs, currency pairs, stocks, volatility indices, synthetic indices, boom and crash, anything that you want to trade, so you can use this strategy, right? So it's that being said and done, it's actually very easy to trade the market, but you don't get just the hang of it just by reading some books. You also have to practice and analyze, right? So I'm going to be sharing with you some strategies, the strategies that I use, right, usually, right? So let's start by support and resistance on price action, right? So support and resistance is, let me use this, right? So support, let's start by support, right? So when you're supporting something, I like to think of it as if what we're lifting it up, right? So let's say we're going down like this, right? The market reaches a certain point, right? This area over here, right? And it goes what? It goes up. So this area over here, that's what we call a support, right? Because the market reacted at this area, which means there's something that caused price to react, right? So maybe we go back, but right now we're dealing with what we just see right now, right? So whatever happens again in this area, we're going to be very careful. We're going to be very wary of this area, because in the past the market reacted to this area over here, right? So we're just going to be very careful or how we act when the market pulls back to this area over here, right? So we go up a little bit, we trace, right? The market, what, let's say we continue going down, right? So the market comes back down over here, right? Now we broke this area over here, right? We were waiting to see how the market reacts over here, right? But we broke that area, right? So when we are approaching a support, we are looking for our buys, right? So when we see that there is no candlestick confirmation over here, right? We're not going to be entering our buys. We just wait to see what the market does, right? So when the market breaks this area over here, right? What we want to wait for is what? Now this area over here, right, is now acting as what? As a resistance, right? So what we've got here is we've got two resistances, right? So we've got this resistance over here of a broken support. That's what I like to call a zone flip, right? And we've got this resistance over here, because the market was going up in this case, right? Came to this point and it rejected, right? And it continued going down. So we've got two resistances. So when the market pulls back, either we're going to be pulling back to this area, or we're going to be pulling back to this area. But usually, if it's a trending market, what the market usually does, it pulls back to this area over here, right? And it continues what? It continues going down, right? So that's the areas that I want you to be looking for, and I promise you, I guarantee you, they're going to be very, very helpful for you, right? But that's not the only solution to. That's not the only answer to how we can trade. Let me show you more ways how we can trade price action, right? So right over here, right? Let's say that's it, right? So what we also know on price action is, what we also use in price action is trend lines, right? So trend lines, what are trend lines, right? So trend lines are, now these are what, so what we're using over here, those are horizontal support and resistance, right? But that's not always the case, because sometimes the market doesn't pull back to this area over here, right? The market can pull back to that area, right? Maybe let's say the market reacts maybe somewhere over here, right? over here the market doesn't test this area, right? Maybe it goes way past over here, like this over here, right? So we don't know what the market does, right? So we just assume we want to highlight each and every key zone that we can find, right? So what we do over here, we draw our diagonal support and resistances also, right? So alongside our horizontal support and resistance, we also have to draw our diagonal support and resistance, right? So we draw our diagonal support and resistance, right? So but for our trend lines, what we usually need at least 2 points, right? So from 2 points going above, right? So we can have 2 or 3 or 4, even 4 points, right? That we can mark. But unlike support and resistance, we can just use this point of only over here to mark what? To mark our support level over here, right? We can only use this area over here, and you'll be able to anticipate the future. But for trend lines, you have to connect the first point and the second point to anticipate where the market is going to what is going to react, right? So right over here, right? So this is another example of how we can use price action, right? So this trend line right over here is a diagonal support and resistance. In this case, it's acting as a resistance, right? But we can also have what? We can also have breakouts, right? So let's say we've got what? We've got a breakout over here, right? We've got a breakout, market goes up, right? When the market comes back again to this region over here, we're just going to be looking for it as a what? As a support again, just like what we were doing for the resistances over here. So that's another tip for how you can use what? How we can use trend lines, right? So that's it, right, for trend lines, right? I'm sure that, and we hope that most of you know how you can draw our trend lines and our resistances and all that. But this is not enough to make money in the market, because if this is just the answer over here, anyone could be making money. Any beginner with support and resistance and trend lines could be making money. So how are others making more money than you, right? So what I also know, what I also want to teach you in this video is is I want to show you chart patterns, right? So what are chart patterns, right? So chart patterns are what the market is doing, right? What the market is creating when it's moving, right? So want to see every trend, every single thing that the market is doing in order to anticipate what might happen, right? So first of all, we've got what reversal patterns, right? So reversal patterns, these are our aims, right? Our aims, right? So on our aims, right, this is an aim, right? So on our aim, we've got what? The market goes up, right? Comes down, pulls back again to this over here, creating what? A resistance. So this is a resistance. When the market pulls back again to that area, right, we anticipate what? It to go down. Why? Because it's what? Is a resistance, right? So what I want you to look for on your aims, right? Aims and W's, right? Is remove this, right? So what I want you to look for on your M's and W's, right? This is now the trick, because this is just what they teach you in the books, right? Just that when the market pulls back again to that resistance, you enter your sales over here when the market breaks the neckline, right? But I just don't want you to look for any AM. Why? Because most of the times the market fools us, right? It creates what? Some sort of what? Let's take this for example. This over here, this is a W. But why didn't it work, right? Because we were supposed to buy when the market pulls back to this area, right? But we've got a breakout and the retest of that area, right? So that's what usually happens in most cases, right? So this over here, we've got an aim over here, right? But it doesn't go beyond, it pulls back again. Why is that, right? So that's what I want to show you, right? So for your aim to be very successful, what I usually want is for this over here, right? For this neckline over here to break, right? So this is what we're going to be looking for, guys. So this is a tip. So watch carefully and watch till the end of this video if you want to be very profitable on using price action, right? So what we want to look for is when this neckline over here, right? This neckline, we want it to break past this previous point over here, right? So that's another move that shows us that the market is ready to go down, right? But if the market doesn't break the previous low over here, we're not going to be looking for that as an aim, right? So that goes the same for our W's, right? So when the market breaks this over here, right, the market can pull back to this area over here, or it can go just slightly below, just creating maybe there'll be another shoulder over here, creating some sort of a head and shoulder pattern, right? So that's what I want you to look for, but look for this breakout first before you consider anything to be an M or a W. So the opposite is also true for a W. So what we want to look for is a breakout of what? Of, let's say, what? We are going what? We're going down over here, right? So this, let's say we're at this point over here, right? I want the market to break past what? This previous high over here, right? Then when it comes back again to this area over here, either we're going to react at this point over here, or maybe we react at this shoulder level over here. So it can usually create what? A head and shoulder pattern, right? But it can also create what? It can also create a W over here. But what we want to look for, the main thing that we're going to be looking for is this breaking what? Breaking market structure over here. That's what we're going to be looking for. At least this guarantees us that we are supposed to start looking for reversal entries. Otherwise, you're just going to keep on losing money, thinking you've got a sniper entry on an M or in a W, and you continue losing money. Right. So that's it for reversal candles, reversal patterns, right? So reversal patterns, we've got head and shoulder, M, W, right? So, or inverted head and shoulder, right? Those are the four main, uh, reversal patterns that I like to look for, those that actually present themselves, right? So then now for the sweet spot, I usually don't advise trading reversal patterns, because most of the times you think you've got a sniper, but actually you're going to be swiped out. Like, let's take this for example over here, right? You've got what? I've got this over here, right? So as you can see over here, I've got this AM over here, right? But it didn't quite break past this over here. So as you can see, the market put back, pushing against that area again over here, right? Then over here, this over here, I've got what? As you can see, right over here, when you've got a clear breakout of this what previous low over here, right? As you can see, when the market pulls back to create what? Another leg over here, as you can see, that's when we actually went down, right? So this is actually a powerful tip that I shared with you guys, right? So just look out for that, right? But as you can see, if you maybe if you entered your sale maybe over here, right? Maybe of course you've entered over here when you've got this engulfing candlestick over here, right? Think that the market is going to go down, right? But the market pulls back, it takes you out, right? And then again, you wait for the market when it comes back again over here, right? Though this one would have worked because the market didn't go past it that much, but you think that you've got a sniper, but most of the times you end up losing money, you end up being what? Stopped out, right? Now for the sweet spot, this is the sweet spot, guys. Uh, M's and W's, yeah, is so like guesswork. You don't know exactly if they are going to work, but continuation patterns, these are the ones that I usually use. These are the best, in short, right? So continuation patterns, especially if they coincide, if they are if they've got a confluence of either a trend line or a zone flip, those broken support resistance levels, they are just sweet. They're just sweet to trade in any market, right? So let's say we are going up in this case, right? So what we want to look for is an impulsive move first, right? Then a pullback. Want our pullback to what? To be in a consolidating manner, like, right? We don't care if it's a flag or a wedge, but we just want our pullback to be what? To be in a consolidating manner, right? When we've got what? A breakout of this area over here, we usually know that the market is going to what? To go a larger move, right? So we've got an impulse, correction manner, and then we're looking for another impulse, right? So this other impulse, that's what we want to look for, right? So what I want this to have what to do is, let's say we're going what? We're going up, right? So we've got what? This, all this over here, we are considering it as an impulsive move over here, right? Then we've got what? A pullback in a consolidating manner, right? Usually flags, that's what we usually get, right? So let's say we've got a flag over here, right? As you can see, this flag over here, we've got what? Then this flag over here is testing what? This zone flip over here, right? I'll mark it out later, okay? So that I can show you, right? So this over here, right? Over here, this, so we mark this zone over here, right? Then we've got our flag over here. if this flag comes and tests what this previous resistance that's now acting as our support, right? It's now a further confluence, because what usually happens on flags or wedges is when we've got what so this is how you draw them, right, over here, right? So we can wait for, you can either enter on the breakout of this flag, or you can enter right over here when the flag tests what, either a trend line, or maybe there's what, either there's a trend line over here, maybe some over here, let's say something like this, right? So let's say the market gives you such a case, right? We've got a zone flip over here, right? We've got a trend line, and then we've got this flag after an impulsive move. Anticipate that there's going to be another impulsive move over here. So these are what I like to call the sniper entries. Why? Because you're entering a trade, you don't wait for such a long time before it starts reacting, right? You enter over here, right, and you've got an impulsive move straight into profit, right? So that's actually that's why I call a sniper. Why? Because we're entering sniper into profit, and we don't have to wait that long. Unlike for reversal patterns, as you can see, let's take this for example over here, right? As you can see, this, how many days did it take to create this whole thing, right? So you're entering a reversal, but it took maybe 4 days waiting for that reversal, and maybe you're getting stopped out. When you lose, and when you finally lose, or passion, or when you finally lose motivation to enter that trade, that's when it goes down, right? So just a tip, especially for a beginner, I advise that you just trade with the trend and look for continuation patterns, just like flags and wedges, so that you'll be able to make profits, right? This is the sweet spot. Is actually what you have to look for, right? And then the other thing that's most important is for you to know candlestick patterns, right? So candlestick patterns, what are they, right? So I don't want you to know all the candlesticks, especially there's no need to know them by name. You just have to see what the candlestick is telling you, like. So let's just zoom in a little bit, right? Let's take over here, for example, over here, right? So over here, what are the candlesticks telling you over here? About what, this candlestick over here, right? So if you see this candlestick, we've got what, a wick to the top, a wick to the bottom, and a small body over here. This is just telling us indecision, because the market is refusing to go up, it's refusing to go down, and the body is also small, right? So the market, this is telling us that there's indecision in the market. And then we've got this one, right? As you can see, there's a larger wick to the top, right? And a small body at the bottom. We've got just a small wick, right? So this now is telling us that the buyers actually pushed the market all the way up here, right? But they couldn't withstand the sellers, because there were more sellers, right? So as you can see, that's why the market continued going down. Why? Because we've got what, the sellers have got more selling momentum, right? So the buyers aren't able to push them out of the market, right? So that's the same for this over here, right? This is an indecision candle, but after the indecision, we continued to sell. This over here, this blue candle over here, as you can see, there's a wick to the top, right? And as you can see, the market continued to what? Continued to sell. Now for these engulfing candles over here, as you can see, I've got what, a small red candle, right? And then this big engulfing candle over here, right? This shows that buyers are what? Buyers are in control. That's what it usually shows, right? But what if I tell you that you can actually usually anticipate that the buyers might actually be gaining control over here? As you can see over here, we've got what, we're creating large selling candlesticks, large bearish candlesticks over here. So we've got a lot of momentum, right? Then over here we've got an indecision candle. After that indecision candle, the candlesticks are actually getting smaller and smaller, right? They are no longer these big candlesticks, these big fat juicy candlesticks over here. They're actually getting smaller and smaller, right? So this actually, especially if there's a support area in that zone, or in that resistance zone, right? If you start seeing a slowdown in momentum, it usually means that maybe the buyers or the sellers, there might be a change of trend, in short, right? So this is just what you have to look for. Know your candlestick, or candlestick patterns, what the candlestick is telling you. Is it that the buyers are in control or the sellers are in control, or it's an indecision candle. In an indecision candle, you just maybe hold that trade, but you don't have to look for many things, right? So this is it for guide on price action. If you're a beginner or if you're a pro level, I think you've learned something. And if you've learned something, I would really like it if you consider subscribing, liking this video so that you can reach more people, it can help more people. So that's it. Peace.